Laura Richardson with Relevate, and we are bringing you another episode to talk about something that's super important, but let's be honest, it's not something that all of us really want to dive into, and that is homeowners insurance policies and what's covered. But despite the fact that this may not be the reading material that you go to bed with every night, it is something that is super important as a homeowner to understand and be aware of what your policy doesn't cover. We've had some huge major disasters here in the United States between North Carolina and California very recently in regards to flood insurance and fire damage coverage and what those two policies do cover. So today's episode, we're going to be talking about flood insurance and fire damage and casualty policies. So first of all, not every homeowner has flood insurance. Not every homeowner's policy actually covers flood damage. So to understand this a little bit better, what is flood insurance? So flood insurance is a policy that covers property damage that might be due to flooding. And flooding can happen in a couple different ways, like heavy prolonged rain, melting snow, if you live in an area that actually gets snow, unlike North Carolina, coastal storm damages, blocked storm drainage systems, or even levee dam failures like what happened in Louisiana. So is flood insurance required for every property? No. And this is where it gets a little tricky. We did another video that was covering specifically North Carolina. Please feel free to check that one out in regards to flood insurance coverage, because that situation happened in a location where flood insurance wouldn't have been normal for you to have on your policy. So it's important for you to understand that we're giving generalities here and that there's always going to be that, outlier situation like what happened in North Carolina where there's not a policy because it's not expected. It wasn't a mistake on anybody's part that they didn't have it. But typically flood insurance is required in kind of that AE zone on a FEMA map. So these are high risk areas where any area with a 1% or higher chance of experiencing a flood each year, that's where you're going to have that flood insurance kind of be required and kick in. So how much does it cost? Well, on average, we're looking at about $1,000 per year. Of course, your insurance carrier is going to be who gives you that final number. And there's also variations in degree of coverage because there are some locations that flooding happens on a regular basis. Like think about out at the coast where we see hurricane damage a lot more commonly than versus here in the Piedmont region or like in the mountains, for example, with what happened in North Carolina. So there are two different options for purchasing flood insurance. You obviously have the National Flood Insurance Program that will give you a certain amount of coverage for residential versus commercial. Commercial typically is double. It's a little bit more higher for like damaged contents and stuff like that. You also can get private insurance. So some people will do this in additional to the previous one that I just explained. Private insurance is going to be another out-of-pocket cost. But if there is a need for that, or if you can't get the type of coverage that you need to cover the entirety of the home, for replacement or even your personal property, that private insurance can kind of be a little bit more of a catch-all. So how long does it take for this policy to kind of kick in? Typically, it's about 30 days from when the contract is set. So if you're buying a new home, flood insurance that would kind of like policy coverage wise kick in, it's going to be about 30 days from that initial purchase. So something to be really mindful of as a new homeowner, and this isn't just about flood insurance or any other type of specific insurance. Typically, you're not filing claims within a certain months of current ownership. Typically, insurance companies aren't going to be super excited for coverage if they're having to go ahead and pay out on something that is so new. This is also something to be aware of when you're kind of assessing, do I want to file an insurance claim versus not? You don't want to end up in the dropped group because it can be really difficult to get coverage post that. So something else to make sure is this insurance needed? Sometimes I think we get worst case scenarios in our head that, well, I heard about this random scenario, so therefore I want it added to my policy. If you're not in an area that is likely to need that type of coverage, it may behoove you to not have that added monthly expense. Also, something just kind of as a rule of thumb that's a little separate from the actual insurance coverage itself, but when you're buying a home, make sure you're asking really deep questions about whether or not the current owners have flood insurance, for example. If you're looking at a map and it looks questionable as to whether or not the actual building itself falls into the flood zone, because sometimes it might just be the backyard, you need to ask, do you carry insurance? And if they say no, you need to ask, would it be necessary? Have you ever? Because we have seen some scenarios where the homeowners will say, no, we don't have flood insurance. And the reason for that is because they have elected not to have it. Essentially, they might have paid off the home, so there's no lender involved that's mandating that they have that type of coverage in order to keep the loan. So just dig a little bit deeper. And if you have any questions, you can actually get a special like elevation certificate to kind of walk you through whether or not that coverage is needed. Something else that we have seen is fire damage and whether or not those policies have the appropriate amount of coverage. So keep in mind, homeowners insurance typically is covering fire and smoke damage. So it's not just about the burning of everything. It's also when the smoke billows up, it can actually infiltrate a lot of additional things and cause some pretty irreparable damage. Most insurance, they may or may not limit the type of coverage if your risk is higher. That's definitely a good question. If you live in an area like in California, for example, where wildfires might be a little bit more common. We are here in North Carolina, so I would say that that's not something that we would typically see on this side of the United States as far as like fire damage coverage. Typically, our type of coverage with your standard insurance here is going to be on the structure of the home, any other structures on the property. So like if you have a shed or an ADU or some kind of detached garage, and then any personal belongings that could get damaged in the fire. So for fire coverage here, it's not wildfire coverage. It's more like if a candle ends up getting knocked over and lighting the house on fire, grease fires, electrical malfunction. So we're thinking like faulty wiring on an older home. Lightning is another big one. But in other parts of the United States, that wildfire coverage might be included. Typically, fire damage is not going to include anything caused by nuclear hazards, which is really important because we do have a nuclear power plant that's here in North Carolina that's right here in the triangle. Arson, poor maintenance of a home. So like if you caused it yourself, or even like just regular wear and tear that could be under that deferred maintenance that wasn't taken care of. So if you have any specific questions about that, definitely talk to your insurance agent. But like, what do you do if your policy doesn't cover fire damage or like you can't obtain that type of coverage? It's very similar to flood insurance that some private insurance companies might kind of step in that place and provide you the coverage that you need to feel secure and that your belongings are actually protected. So if your home is deemed ineligible for fire damage coverage, some insurance companies, they may just not require it, right? Or if they consider your area to be too high risk based on like fire maps or any type of risk scores, that's something that they would have to be very open and honest with you about in the process of procuring this. But there are certain organizations that can also step in and assist if that ends up being your situation. There is also something that's called a FAIR plan, and it's a fair access to insurance requirements. That would be something if you do fall in that can't be insured category. I would highly recommend doing a quick little search on that. So FAIR, fair access to insurance requirements. It's an insurance policy. So guys, if you have any questions about this, like always, we do have reputable vendors that we can actually connect you directly to. They can answer more specific questions or even take a look at your current policy and make sure that you're getting the coverage required. Every time you get that insurance policy, a little like miniature binder where it talks about the different types of coverage, make sure you're reviewing it. Again, I know this is not information that is something that it's light reading at the end of a day, but it is so important. Make sure you are taking pictures of stuff in your house, that you are keeping these in a separate location so that they can be accessed, so that if you do have to file some type of insurance claim, that number one, you have the policy coverage. Number two, you have the documentation to provide what is actually being covered under that policy and that was physically there to be replaced. And if you have any questions or need assistance, reach out to your carrier to make sure that they are assisting you in that process. I'm Laura Richardson with Relevate, and we will see you next time.